Investing with great capital is not the best fit for everyone. It's just not right for everyone. Hello everybody, my name is Spencer Gray. I'm the president and CEO of Gray Capital. We're a multifamily apartment investment firm based out of Indianapolis, Indiana. I work with accredited investors, family offices, and institutions like registered investment advisors, multifamily offices, help deploy their assets into cash flowing multifamily apartments. But even if you're convinced that making an allocation and investment into real estate, maybe it's specifically multifamily apartments, is right for you, you have to make sure that really the ideals, principles, specifically goals and risk tolerances that you have line up with the sponsor or the manager that you're going to be investing in. So for example, if you need a lot of liquidity, which means you need access to your funds in a short period of time. Like the stock market, you can buy and sell many times a day. Investing with Gray Capital might not be for you if you need that type of liquidity, or if you just need access to those funds in the next year or several years. You could look at a publicly traded REIT that you can buy and sell a couple times in a given day, but there's a lot of trade-offs. There's a liquidity premium or an illiquidity premium that goes along with investing in real assets such as real estate. So while you don't have the ability to buy and sell in and out of something on a day's notice, you're compensated for higher returns and quite a few tax benefits as well. So for example, Gray Capital, over all of our full cycle projects, which mean essentially an apartment building that we have bought, executed a business plan, usually renovated it to improve the property, we've delivered an internal rate of return of 30% on average across all of our projects. You compare that to kind of the industry benchmark in real estate is like kind of a 15% IRR, or if you look at the long-term returns of the S&P 500, depending on kind of your time frame, you're anywhere between kind of 9 and 12%. So we're more than doubling what the benchmarks are, and especially when you're looking at liquid options such as the stock market. But how about time horizon? Well, you might be an investor saying, look, I understand real estate, I'm comfortable being illiquid, but I'm really looking for a high velocity. I'm looking to turn something around. There's nothing wrong with that. You're gonna make the most money by doing as many deals in as short a period of time as possible. The challenge with that, and the concern for me and the reason why we don't do that, is because betting on that business plan involves a high degree of risk. If you have to turn something around in 2 years and you're financing it so you can sell it in 1 year or 2 years, you are taking a chance that the conditions in the market to either sell or refinance are going to be appropriate in 1 or 2 years. Just look at the most recent example with 2020 through 2021, interest rates were 0%. Well, now interest rates are 5 to 7%, depending on what type of financing you're getting. So if you had a business plan that you needed to execute within a year and you bought something in 2021, 2020, you might be between a rock and a hard place as cap rates are going up, interest rates are going up, and there's not a lot of sellers right now. On the other hand, at Gray Capital, I like the idea, just personally, and it's a principle of our business. We want to maximize success in every project. We want to reduce risk to create an ideal risk and return balance. And one way we do that is we trade a little bit of potential upside for a much higher degree of certainty of success. The way we do that is put long-term debt in place, permanent debt on these assets, typically with a fixed rate. In fact, almost all of the debt we've done in the last year and a half has been on fixed rate loans, where we've removed interest rate risk and volatility. We removed it from the equation entirely. We've just taken it off the table. Now, the downside of that is there's prepayment penalties associated with that. And so 2 years from now, depending where interest rates are, it may not be economically feasible for us to sell that asset. We may be giving up an opportunity to hit a very high 50, 40, 50, 60% IRR. And that IRR is a time-weighted formula. So the shorter a hold period, the higher the number is going to be. So we're trading off that potential 40 to 50% return, maybe even more, for success, a higher degree of success. And so we're going to target kind of 18 to 20% returns. Now, we've hit, again, our average is 30%. So we've blown our expectations out of the water on every single deal we've gone full cycle on. And some of those were shorter hold periods than initially anticipated, but we set the investment up for success for the long term, so we don't have to sell it for the 10, 12, we've even done deals put financing in place where we have 35-year terms on these assets, or we don't have to put a new debt on it, we don't have to sell it. We can wait 35 years if we need to, which we're not gonna wait 35 years. You also might think it's really important to work with a firm that's been around for 30, 40, 50 years. There's a lot of experience there. They've gone through many more cycles than I have. I've gone through a few, but not as many as some folks that have been in the business for decades. So while I don't have 50 years of experience, I've been investing since 2006 in real estate. I built several companies and invested in well over almost $2 billion worth of real estate since I've started. And that's just me and the team. When I started Great Capital with my wife back in 2015, it was just her and I. But we've grown considerably since then. We have about 35 employees as of today. We'll be closer to 60 employees early next year. But we may not be big enough. There are firms out there with hundreds of employees. I think Blackstone has 900 employees just on their corporate team. That may be the organization and sponsor for you. But if you're looking for a team that is nimble but has all the resources, has all the people in place, but certainly not a one-man band, has the investor relations to have top-notch customer service, has a dedicated property management team, asset management team, marketing team, accounting team, dedicated analysts, construction, we might be a good fit. But again, if you need a sprawling organization, we are not that organization. We're big enough, but we're still nimble. Another reason that might make just Great Capital not the sponsor for you is if you are just not interested in investing in the Midwest or the types of apartments we're buying. We're typically buying B-class and A-class apartments, typically not built before the 1980s. We're buying a lot of A-class stuff right now though. But if you're someone who's like, no, I gotta be in the Sun Belt, I need to be in a primary city, like I need to be in New York, LA, or I need to be in Texas or Florida, nothing wrong with any of those markets. It's just we don't have a tactical advantage in those markets. But if you want to invest with a group that has a much more niche focus and level of expertise in the markets that we invest in, that isn't going across the country, looking for greener pastures and kind of chasing kind of the next thing, but really kind of digging in, sticking to their knitting, and understanding where they invest. Well, that's what we do at Great Capital. We invest in markets that we know, that typically aren't any further than 4 to 6 hours away from our home base in Indianapolis. If you like that level of intimate knowledge, your sponsor team having that intimate knowledge of the markets where they're investing and you're investing in, Great Capital would be a good fit. But again, if you're looking for a firm that's everywhere, all across the country, it might not be for you. Now also, if you're looking for, ground up development, severely distressed assets, that's just not what we do. Again, we've got a niche. We have a model that has worked consistently, that's dynamic and adaptive because we've had to tweak things depending on where we are in the cycle, whether we're focusing a lot on value add or we're focusing more on organic growth, or we're focusing more on the B class or A class, depending on where the market is at a given time, from a demographic demand standpoint, as well as just the real estate market. We move around, but we still have a good understanding of what our business plans look like and how we can execute tactically on those business plans. We're not just chasing kind of that next thing in those shiny objects. There's a lot of shiny objects, especially in real estate. Another reason why it might just not be a good fit is, if you want to be extremely hands-on, you want to be involved in picking out the paint color, choosing the contractors, getting your hands dirty. Well, we can't necessarily run an investment by committee. We can't necessarily, we typically have 50, maybe 60 investors on a given project, and it can be very difficult in a syndication to take that amount of specific input and take action on it. Now, that being said, we have open lines of communication with all our investors, and we have taken advice from some of our investor partners, especially in recommendations and referrals. we're an open book and we have open communication. But if you need that type of control of saying we're going to do this now and that then, it might not be a good fit. The folks that invest with us because they trust our judgment, they appreciate our track record, they know that we have had success and have had proven results, and they delegate that authority to Gray Capital and our team to make those decisions, and are very comfortable and are happy with the results. Wanted to do this so we could be helpful, acknowledging that we would love to work with folks that aligned with our goals and objectives and risk tolerances, but that might not be for everybody. But the bottom line is we want to help you, get invested, whether it's a group not Gray Capital that's right for you. Because if your investment objectives and goals and just style and preferences don't line up with Gray Capital, there are a ton of great syndicators and sponsors and groups out there doing the types of deals maybe in the market with the strategy that aligns with you, and we think you should find those operators. But if Gray Capital's vision of conservative, longer-term holds, investing in A and B class, market-rate multifamily assets in the Midwest with a focus on cash flow, then it might be. We would love to have a conversation with you. If you ever have any questions about Gray Capital, our investment criteria, how we work, certainly check out our website, graycapitalllc.com. Subscribe to our YouTube channel. But the best way is always just to schedule a meeting with us. It's either going to be with me or typically Blake Peroni, who's the head of our investor relations department. We love having conversations with investors, prospective investors, and to figure out if it is a good fit. Now, the last piece, if I didn't mention this, our offerings are only open to accredited investors, which that's a big dividing line in the sand, and that's not something that a rule that we make or really even enjoy, but it's just the SEC, it's rules and laws that the SEC have bestowed upon us. So if you're an individual, you have to be having an income of over 200,000, married couples 300,000, or you can have a net worth of up to or over $1 million. That would make you an accredited investor. And if you're not an accredited investor, well, there are great sponsors out there that are putting together deals that you can still invest in. We made the choice to only work with accredited investors so we could make videos like this and advertise our offerings because that's the choice that we made. We like marketing, and we can work with people across the country by making videos and putting out content like this. So again, if you're not an accredited investor, it's not going to be a good fit. Check out the website, make sure you schedule a meeting, and looking forward to talking with you and answering your questions. Spencer Gray, President of Gray Capital. Talk to you soon.